Welcome to the iSoftpull Main Course Podcast, where we get straight to the point, the meat and potatoes. Now let's dig in. All right, welcome to the show. We have Laleh Hanks from America Choice Mortgage joining us today.
Thanks for having me, Dan.
Of course. And what's interesting about Laleh is she signed up with iSoftpull a while ago and didn't use it at all, and we just billed her every month for like 6 months. And I wasn't even watching the billing, and I called her to refer her a new client because they wanted a softball. And she said, Dan, we canceled a while ago. We don't even use you guys. And I was like, what are you talking about? We've been billing you for months. And so we opened up the account, and she's like, okay, well, let's check this out.
I know, I did that with my gym membership too, but.
Yeah, funny about that. I paid for an annual plan. Coming out of the pandemic, I paid for an annual plan at 24 Hour Fitness because I was all excited about it. I haven't been back, but I'd like to do it.
That's the same place. Maybe we'll have to get a workout in. And accountability partners, though. Yeah, we need to use these memberships if we're paying for them. So yeah, you called me and.
So what happened? Why didn't you use it in the beginning?
Mostly
you were excited about it, and then just.
I just didn't dive in. I didn't make it part of the systems. Kind of out of sight, out of mind. You know, I always go through certain steps to prevent needlessly running people's credit anyways. So I felt like, oh, since I go through these steps, I just kind of was a creature of habit,
right.
And so you have to use something or you lose it. And so you did say, hey, let me just walk you through that. And then you were accountable, said, hey, I should have done this sooner.
Right.
I really wish I would have walked you through. And I said, me too. And then all of a sudden, I find that when I send that link to somebody, it bounces right back.
Right. So what we did was we jumped on a screen share, and I don't even think you were like, all right, what do I do here? It was cool because you already had a consent on file for a credit report. And what was interesting to me was one of the first times I'd actually worked with a client, and because I'm usually doing more operational stuff, and actually looking at the credit report, and we compared the two, and it was the exact same report.
Same score, same debts.
Same exact everything.
Right.
And so we did it again, so then I referred you another client. Right. And the reason that they came to us was that they were tired of working with the broker that was just going to do a hard pull them right out of the gate.
Right.
So can you tell me about your experience now that I assume you've adopted it, and you were telling me you send a link to people, adopting that part of the pre-qualification in your business?
Yeah, it's made a big difference because I believe, I'm not really a salesperson. I don't look at myself that way.
Sure.
And I'm a passionate math teacher. And unfortunately, there's a lot of math that our school systems failed to teach people. And if people are taught the right math, especially passionately, because the heavy lifting is up front for the borrower, we have to create a give and take. So if I have, for example, before I knew about iSoftpull, if a borrower comes to me and they say I have, 800 credit. Last time I looked at it, it was 780. I don't make them run credit. I don't want to run credit for them. They're confident where their score is at. My next step is let's qualify your income. And if your income qualifies, then I'm going to run credit for multiple reasons. One, why do I want to pay $50 to, run somebody's credit? And, and really number one is, do they really want to inquire? They need to learn how, I do business.
Right.
And it's a trust building process, especially if it's a first introduction. So return clients, they're going to do anything and everything that I tell them to do because they've already experienced working with me and they're coming back. But it's that first time client that we have to start this reciprocation. So if somebody wants a quote from me, normally I say, hey, send me a mortgage statement. Send that over right away. And that way, I'm not just giving you numbers that you don't really know what they mean, but I'm going to help compare. You're going to see behind the scenes, how long is it extending my mortgage? What goals, benefits are we accomplishing? And they're going to be like, wow, I just learned so much. Run my credit, do whatever. I'm going to do anything
Sure.
and everything. And so I feel like it's a good reciprocation process so they can kind of get used to that relationship.
Yeah.
And if I'm too busy and don't call them back, because that's what a lot of people do, then we didn't waste an inquiry and they just feel like they got, wasted that effort.
Sure.
And so they can learn if we are a good match.
So a lot of the mortgage broker clients that I talk to, they don't even use iSoftpull on guys that say I have an 800. It's the client when they say I have a 630, right? But I'm seeing back and forth. So what's the hesitation there?
My hesitation is, the next step is really income. Because, if I don't value and respect my time, then I certainly wouldn't be valuing or respecting theirs. So I explained to them that, this is a very busy, demanding industry. And if you want your file to get cut in front of the line, give me all your income docs. And not everything, because everybody gets overwhelmed. I just need certain things for certain types of income. So as long as we're moving right along, but once I get to income and I don't have any debts, I'm still moving slower than I would like.
Sure.
Because then it's still that bounce back and forth. And
so what do you get? You get their tax returns, or you get?
Yeah, at that point, if I don't know, I get their tax returns. So
Right.
it really just depends on the type of income. So a lot of misunderstanding is people feel like a W-2 borrower, if they're just employed somewhere, salary,
Sure.
I don't need tax returns.
W-2.
I just probably need one W-2 depending on how long they've been there and the 2 most recent pay stubs. Do I need 2 months checking statements? Not if they're taking cash out or don't have rental properties. So inexperienced loan officers kind of nickel and dime people, and it gets very exhausting.
Right.
So I consider it kind of like, the heavy lifting for the borrower is understanding, where's my income coming from? What documents do I need to document that? And I believe less is more. So if somebody comes to me and they've got 10 asset statements and all of this, I don't need that. I have to keep pinging them when those docs expire. But if the loan doesn't require the savings, then why would I put it in the file? Right. And so just, better understanding what you need from the borrower. And then as soon as I have income, and if the debt ratios are tight, or even if they're not, I might say, hey, let's just go one more step and, do the soft pull. That way I'm like $3 in. And yes, my time is valuable, but $3, in rather than 50 and their inquiry. And then I turn around and say, sorry, you have an auto lease that you co-signed for that you forgot to tell me. And, then there becomes that like discovery phase where I'm problem solving, because there might be more ways to qualify them, especially now that I've been doing this for 20 years, not 2.
Right.
You've seen a lot. And so you learn how to get around problems. So having that soft pull up front saves me all that time, because what if there is another mortgage on there? Oh yeah, I forgot. My brother does that. That's his house. I don't pay for it. And it's like, well, does he send you money, or does he pay for it from an account with only his name on it? Oh no, he sends me money. Oh, do you not report it as a rental? Great. Well, you're doing that backwards. And now I can't qualify him. And maybe I just spent 2 weeks, understanding the income. So I do think it's important.
Is good?
Absolutely, so that you can see, because the iSoftpull breaks it down so that it says real estate, non-real estate expenses.
Is that helpful?
Right? Sure, because I already have their mortgage statement, or they tell me what they're, financing, and if that's $3,000 or $4,000 a month, but I see $10,000 a month in real estate, they forgot to tell me something.
Sure.
Right, and a lot of people try to be underwriters just by common sense, and that just doesn't really work. So I'd rather be that filter process. You show me and tell me everything, but we may not need to put everything in the file. So it just depends, what type of loan you're asking for.
So do you find it's easier to get those debts on a soft pull than I assume you traditionally would have done a hard pull to get the debts?
I would traditionally do,
right?
Yep. And that's changed from maybe like $20 to about $50 per pull.
Over time, right?
Well, over time, I've been doing this for 20 years, so I think it used to be somewhere around $15, but those would also rack up. So every time you run a finding from another software company, even though it's just the computer pinging the information, they'll charge you, So sure. Credit reports used to get up to well over 100, especially if you're doing credit repair and that type of thing.
If you're doing joint too?
Yeah, well, yep. I found a good company that, but it's still $45, and at least I don't get the nickel and dime all the way through. But it's expensive. We have thousands of dollars in credit report, fees. And so this allows me to, basically for the cost of 3 credit reports, roughly, I can run as many, as I want, to limit my time and effort into a file to later find out that they forgot to tell me about the new auto loan they signed for their kid, or the student loans that have deferred payments, or the house that their brother's been paying for.
So do you look at the total at the top, and then if it's bigger than what they assumed, you drill down?
I go straight to the bottom. I look at the monthly, and then I'll bulk that into the file if it says non-real estate debts. And if my ratios are still really low, then it's a moot point. I just keep explaining the benefit to the borrower.
So a lot of people ask, is it a try merge, right? Is it the middle score? And a lot of first time prospects, when they come in, or people interested, they're so used to the try merge that's what they want. But from what I'm hearing from you, using Experian only, you're getting a lot of value just off a single bureau. Can you?
Yeah, absolutely. I think it's better than using what they see on maybe their apps or their credit card companies, because I find that those are far more off. Whatever that system is telling the borrower generally has a bigger gap than what every time you've told me what the score, or not you, but iSoftpull, the system, it's literally, if I'm running credit within the same month, it's exactly what Experian is. The challenge is if somebody's originally from maybe the East Coast versus, we're in California, I feel like there's a little bit there's more creditors that maybe just use Experian on the West Coast and more creditors that maybe just report, to TransUnion on the East Coast. I've found over history that was the case because it does cost the credit companies to report.
Yeah.
So it's just a learning process, I think, for everybody, but it does also, bring up conversations and teaching moments for my clients. For example, people that pay their credit cards off monthly, they think they're not going to have any debt. But that's not the case because it's the point that the creditor reported to the bureau what the balance is. It has nothing to do with their due date. So clients get frustrated that their score could be higher, and I tell them they need to do this to get it, over the next pricing adjustment. And they're like, but I pay that off every month.
And then you start using it again.
But then it's a teaching moment because I can tell them, call your creditor, ignore your due date, don't ignore it, pay your credit card twice a month. But make your due date whenever the creditor tells the credit bureaus your balance. Make it 2 days before that.
Isn't that tricky that you would think that they would report the statement closing balance?
Yeah, they don't want to, but that's
I never really
we're not going to go down that
I had
one
to figure
today.
that too. So just to let you know, we just got TransUnion and Equifax.
Yay! I'm excited about that.
Yeah, so in about 3 months here, we're doing the development right now. We'll have all three bureaus, the mortgage score. So you will be able to have all three bureaus and all three scores, the mortgage score. The only issue is that I see is it's going to be, $3 each, right? Because it's each report. So instead of doing one for $3, I think you'd be able to make the decision, like, do I want to pull one? Do I want to pull two? Do I want to pull all three? What's your opinion on that? Would you still pull one, or from a cost savings perspective? Or
well, what I would do, as far as marketing and the auto, response type of process that we put in to use this, I would just do probably Experian or one, mostly because I'm in California.
Yep.
So I feel like that's the most solid middle ground score I'm going to get. But it's not always the case because if there's, a small collection and somebody didn't know about it and it went on one score, it can really pull, that score
the other
down.
Two down, right?
Yeah, but at that point, I feel like we're moving fast enough. It just gives me that give and take so that my client is actually working with me with limited risk. So first I say, send me a mortgage statement. So we can do, front and back comparisons because there's numbers everywhere. And then that allows that teaching moment about, what's your tax benefit? Are we improving our principal reduction? So if you look at all the money in all those three places, sometimes people can get 50 grand out of their house and they're paying the same interest and they're paying their balance down faster and they save money. So do you really care about a re-amortization if your net cost is really, the same? It's almost like free money, right? So explaining that so that they can make smart decisions because they wouldn't be anywhere further in 10 years if they sell the home. So why not get the cash out? You can put it into the home. So that allows me that teaching moment. And they're like, wow. And I say, but let's get the quote correct. Fill this link out and send me these documents. So normally they do documents and that link at the same time.
So tell me about that link. So a minute ago, you said that was before we put it into our marketing efforts in this link. Mm-hmm. We haven't really talked about that. Tell me about how you adopted it since the first time we talked about it, and we just manually pulled when we were on a screen share and you manually pulled it, but now I'm hearing you're integrating it into your marketing.
Well, one of the biggest ways, as soon as somebody sends me a mortgage statement, I bounce back with that link and what documents they need. If I don't know what documents yet, then I send them the intake link, and that asks the questions that are really important for a loan officer to ask, like, do you have any other liens? Do you have solar? Who's on the property? Do you have a trust? That's time consuming for me to go through those questions, so giving them multiple ways to answer that and keep moving the process forward, I think really helps. Some people want to talk to somebody. Some people might want to print something and fax it. Somebody else might be okay with just a link. And so we try to conform and make the process easier and less painful for all different types, especially, if there's older people that are really nervous because seniors get preyed upon all the time. So they're really hesitant to give the social. Sure. Half the time they're blacking it out before they fax it, and we have to get it again because eventually, we need complete documents. So it's a trust building process. And that link does allow us to keep bouncing that ball a little further and kind of like a natural progression to our process.
So you found that just by needing the name and address and not needing the social,
just by them doing it, and they see when they're filling it out exactly what it is. So I prefer to just send them the link.
Yep.
Saves me 5 minutes too. Time is money.
Of course.
And after all the time and experience, it's kind of like I try to correlate it to going into surgery. Like, let's say, heaven forbid, you have to have some type of serious surgery, whether it be, your spine, your heart. If your doctor was the one, taking your intake sheet or scanning your insurance card or taking your temperature or weight, you might be rethinking who you're getting surgery from. So it's also a process, for my support team to keep refining that file so that when I do get to it, I can get through them quickly and I can see the picture so that I can make a fast recommendation.
Nice.
Yeah, so that's kind of how it really does help keep the ball moving, I think.
That's good. So we've been talking to Laleh Hanks from America Choice Mortgage, reviewing about how she adopted soft credit checks into her technology. But now I want to bring up a new point and talk about the book you wrote, why you wrote it. You wrote a fascinating book for people wanting that American dream, right? And I think she brought the book here for us. It's The Road to the American Dream by Laleh Hanks.
Yeah, it's fresh off the press. We went live.
Am I going to get a signed copy?
I'll leave that one with you, yeah.
Nice.
Absolutely.
So let's talk about your book, why you wrote it, and then maybe we'll finish up the podcast about, how you're unique to your customers and the value that you bring to your customers.
Sure.
So why'd you write it?
Well, I think most clients have similar questions. At first, it was a little bit self-serving, typing. I type fast, but it was like I'm answering the same question. So I just started to kind of generalize my answer. I think, blogging kind of got popular, a decade ago. And I never quite got to that, but I started creating those articles. So if someone said, hey, should I have an impound account? Or do I need to make my mortgage payment while I'm refinancing? Or, why are my closing costs look so high? Or why do I have to get all these taxes paid up front? The same questions come to me over and over. Should I pay points? What's the benefit? How do I calculate tax benefit? So instead of like re-explaining it every time, I just kind of started creating PDF documents that I could attach. I would still do their numbers and, paint some pictures and do the math for their situation, but at least that general question, I'm like, here, read the attached. And, I had hopes to blog someday. And then as I've been growing and how, we met on an entrepreneur, kind of motivational event and I wanted to, increase my business, I felt like I needed a training manual. But I needed a training manual as much for, my team as I'm, training people in the industry and giving them the opportunity that I was given. I just thought, well, maybe I should write a book that kind of everybody could use. And I was just really frustrated because going into college, I really wanted to be a pediatrician, then a child psychologist. And then I kind of went into realizing marketing and sales was the fastest way to make the $100,000, not go $100,000 in the hole. Yeah. And so that's how I got into, business and sales, so to speak. But I got recruited into mortgages because after 9/11, my last business got pulled out from underneath me. And so I feel for what people are going through, that this COVID pandemic impacted heavily.
Businesses are just wiped out.
Yep. So back when 9/11 occurred, I wasn't in finance, but I was in employee benefits and kind of just got that yanked away. And the only person that would call me back was somebody trying to recruit me into mortgages. So my first day, I got 18 loan applications, and I kind of never looked back. Went through another market boiling point, so to speak, and made it through. But through all of that, I feel like the banks got bailed out in the real estate crash.
Yeah.
And did the consumers get smarter? There's compliance and rules that are created, but in most cases, they still serve the banks. They really can be more costly for the consumer. So who's looking out for the consumer, and why did we not learn what we need to know about building, this is one of the only places you can buy dirt in the whole entire world. There's only a few countries that allow you to finance.
I didn't know that.
Yeah, so I just think it's an incredible tool for you to also obtain large chunks of money, because people that are, working, that's great. We need everybody. We need every facet of, types of jobs. But how do you get, to where you can really use that as stepping stones? It's really through real estate. And over time, if you compare, how long, California or San Diego has existed, compared to other places, even the East Coast or on the other side of the world, real estate's expensive, and over time, it really just goes up. And when you mortgage something, you're only going to remortgage your property if it provides benefit. Either you're going to save monthly, you're going to get cash out for home improvements, you're going to be able to send a kid to college, or you're going to be able to buy another home. So that's the only time you would remortgage. So your payments always go down. You're always gaining equity one way or the other, right? And there's tax benefit. And most people don't know how to even calculate or where to look for the benefit in a refinance. And so like I said, I'm a passionate math teacher at this point, because I am not going to sell you into a mortgage if it doesn't make financial sense.
Sure.
Yeah, if you know how to do the math.
So the book is written for who's the target? Who's the optimal reader of the road to the American dream?
You know, I wish that and hope someday that it'll be in schools and that we start learning this at a really young age, because understanding what good debt, bad debt is, understanding how to leverage. There's a lot of misinformation out there. One of the biggest ones that I find interesting is you should never, ever pay extra to principal on a fixed mortgage. Ever, 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 until you can pay the entire balance off. And the banks try to talk you into biweekly payments, you know, with them. And all it does is make the bank stronger, okay?
So you're saying don't pay down more,
Never, unless it's a home equity line and it's re-amortizing daily.
right?
Yeah, the only
Why
other
is that?
time, because you're giving the bank that interest scale, it's fixed. So the
Right.
bank's gonna make their money no matter if you give an extra $5,000, $10,000, $5.
Right.
If you, heaven forbid, have a car accident like I was in, I got hit head on 55 miles an hour, I had to eat through a lot of savings. If I couldn't pay that mortgage or wish that I didn't put $5,000 into it, they're not gonna give it back to me unless I qualify to get it out. But what if I can't work? They're not gonna give it to me.
They're not going to give you the refinance because you have no income? Is that what you're saying, the bank?
They're not gonna give you the refi because you don't have the job. Maybe you're on medical leave. So you have to have guaranteed income at least for 3 years on something like disability, right?
Sure.
Or support payments. And if you can't work because you're on medical leave, the bank will not give you a loan. They will not give you the money back. And if you get so dark into that hole and you can't make your payments, they'll be happy to take your home. It should be considered predatory lending. It really should be, because not only are they taking that money and they're not going to give it back to you, they're not going to give you interest on it. And you could have taken that money and put it in a CD in the most conservative format possible and still gained 0.5%. And over time, you would be able to pay the balance off in full faster than they're even advertising.
Sure.
And then what if you want to buy another property? What if you go, hey, I want to
Then
rent
you gotta
that
take
out.
the
Now
money
you got
out.
to
Now
get
you
the
gotta
money
ask them
out.
permission.
Yeah, and then you got to pay $3,000-$4,000
And plus, it's
in
like
card fees.
considering inflation too. In a 30-year fix, you're paying. I would say drag it out, right? Because you're paying the same amount, but in dollars 15 years later.
Right.
Right. So the dollar amount is the same, but the value of the dollar that you're putting into that fix is less.
And I even look at people say, oh, I like the shiny rate on the 15-year. I'm like, but now you're squeezing it into
Sure.
this and you're limiting what you can qualify for if maybe you need a car.
Sure.
Right? Or what if you do want to buy another property or have to help, you know, one of your kids or parents or something like that? It does limit, you know, what you can qualify for. And for that little bit of difference, if you take that $1,000 a month extra that now you're forced to pay, what could that money do somewhere else? So one of my examples I like to give is you buy a home and your home appreciates from the roof up. If you put your money under it, it's being shaded. It's not getting sunlight, it's not getting watered, interest, it's not growing. So your money does not grow under the roof of your home appreciates from where you bought it. So the thing that people need to understand is once you can get your hands on any type of collateral like that, that is your tool, that's your leverage. Now banks are interested in lending to you because you have something of value.
Sure.
You know, look at the rate that you would get on just a, you know, private money loan with no collateral. You're going to be well into the double digits, right? And you're going to waste a lot of money that way. And so I think going back to your question, who's the target audience? I don't think anybody shouldn't be the target audience. I think this book is for everybody. And the sooner we get people, you know, reading it and understanding it, I think the more stable people will be, not only as individuals, you know, mentally for their retirement, as well as employees. Because you have a team here, you know, it looks like you're growing. And, you know, people are less likely to go get recruited away or look for other jobs if they have a mortgage, because that's a risk. You know, they go,
That's
the
true.
grass is greener, but they go, oh, I don't want, you know, I don't have the room to. So you have actually more stable, committed, you know, employees, and over time they'll see that they have opportunities, and you can use that equity to, you know, do home improvements, buy another home, maybe even start a business. So it gives a lot of opportunity that just I don't think should be taken for granted.
I like it. I like it. So the Road to the American Dream, you can find it on Amazon.
It's on Amazon.
Is that right? Where else can they find it?
Well, we would love it if you buy it from Amazon, and I'm in Rancho Bernardo for anybody local. If you buy it on Amazon, write a review, come by, I'll give you an extra signed copy for free, or we'll mail you one. But we really, you know, you can get on our website at The Road to the American Dream or lalehhanks.com.
Nice.
So.
Okay, so we talked a little bit about the Road to the American Dream that you can get on Amazon as well as our website. Let's talk a little bit about what separates you as a business professional, as a lending professional, versus, you know, Joe Schmo over there at ABC Lending. What What's the value that you would say that working with you separates you from your peers?
Yeah, I just think kind of that common sense math. I do have that conversation a lot about, not paying down to principal. And a lot of people just do and regurgitate what they're told. But I really try to understand, what are your goals? Not just right now, but let's think forward, because I understand how to forward plan better. Because what if somebody forgot to tell me that they want to sell the home in 2 years and they don't need this much home? That's going to change how I recommend, whether they pay points or not, right?
Sure.
So I really do take the time to understand what the plan is, because I take, this expertise really, really seriously, because it's normally somebody's, biggest asset as well as their biggest debt. And, if you handle it right, it can really be an amazing tool. If you make mistakes, handle it recklessly, go beyond your means, it, it can be really stressful, and it can cost you in more areas than one.
Absolutely.
Yeah.
And tell me a little bit about the team at American Choice Mortgage.
Yeah, I mean, I'm a big thinker. I'm an entrepreneur. And so I like to create team events and community events. That's just really the way that I believe in marketing myself, especially with going through that, real estate crash. There was a lot of, I was just feeding the team leads. I wasn't teaching them how to, be involved, teach, how to really care, and be passionate about what we do and the information that we can provide others. I also try to really encourage that spirit that we're able to take people to another level. So people get really passionate about, what they do and how they can be involved. We love our team, and we're constantly growing and looking for more. I have a lot of people, requesting to work with us. So that I'm honored to have that opportunity, but also just trying to, to build that team where we can continue to support and grow together.
So are you recruiting? Are you building right now?
Yeah,
Are
absolutely.
you stable? Talk to me about your recruiting efforts and where you see American Choice Mortgage over the next few years.
Yeah, I do like to kind of do what everybody else isn't doing. So a lot of people right now, they're looking, for the high loan amounts, and they're just trying to take advantage of this time. But, we do help all areas. And I feel really thankful that somebody recruited me and gave me this opportunity. So I've been trying to create a loan officer processor apprentice program so that we can really help people with those tools so that they can learn, what's actually applicable. Because a lot of people want to be licensed real estate agents or loan officers, but just getting that license doesn't teach them how to do it, right? Sure. So I'm really looking for people that, understand that the passion behind this, are looking at it as a career, that want to really get better every day at each aspect. And so for the right people, we're willing to teach and to train to allow them the opportunity to get into the industry. But overall, finding the right loan officers that are willing to learn how we do the business, because again, we get a lot of return clients, realtor referrals, peer referrals, family, a lot of military. So when someone comes to me and asks for a loan, I can't just hand the lead off. I really do need that loan officer to be trainable. I love the experience, but also to understand that we do this a certain way. And on that first quote, you are going to run a fee schedule, and you're going to run a few amortizations. And it's tough to teach people to do it right up front, because just like in real estate, we're working pro bono. Same thing back to the credit expenses. Like, I'm already going in my time just out of good faith that you're asking for a quote. And so when I quote somebody up front, even when I don't even know if it's a deal yet, I'm really spending, anywhere from 30 minutes to 2 hours crafting a solution, and I haven't received a penny. Right? So finding the right people that are willing to do that, but do it right so that our closing ratio is high and our clients are educated, because knowledge is power. And if we provide them with that, that knowledge and that priceless information, they are hungry for more, which is how the book came to be, because I get more and more questions. And so my clients wrote the book with their questions, really. I just kind of eventually pieced it together with the help of Danielle. She's my EPM, and I had to hire a boss. So she kind of held me to my timelines, because I'm too busy quoting loans and taking incoming. I couldn't do that alone either. So yeah, we're looking for good people that understand urgency, want to passionately help people, and, experience is great as long as they're teachable, so that they understand how we do our system, and duplicate that, so our clients don't feel like they're being handed off as a lead.
So thanks for coming on the podcast.
Yeah, thanks for having me.
Absolutely. We covered a lot here. We talked about how Laleh wrote a book, The Road to the American Dream. and I'll go ahead and give that to you. We talked a little bit about how her recruiting efforts are to bring people into her company that are results driven and that she has a desire to mentor and teach people.
Yeah, absolutely.
Right? And then we did talk a little bit about how she's implemented iSoftpull into her process and how that's greatly benefited her company. So Laleh, what can you tell about somebody that is considering using iSoftpull in their business?
I definitely recommend iSoftpull. Ever since I started using it, it's really improved my client relationship. They're able to get involved and understand a little bit more about what we can do for them, as well as allow us to be more accurate and build that trust and relationship so that we know it's a good fit. So iSoftpull's worked really good for America Choice Mortgage.
All right, well, thank you so much. Let me check out the book.
Yep, this one's for you. I'll make sure to sign it before I walk out today, and I really appreciate you having me and really appreciate iSoftpull. Been super helpful for my clients.
Awesome. Thanks for coming, and we look forward to having another podcast maybe next season, season 2, and we'll do the same thing and see any updates and how this has really impacted the community.
That'd be great.
Guys, thanks for joining us at the iSoftpull podcast. Look forward to speaking with you again. Cheers. Thanks for listening. Subscribe to the main course for straight to the point business insights.